Hello guys, and folks, ladies, whatever. I'm going to show you in this video MotiveWave and why I think it's probably one of the best platforms out there. I'm going to talk a tiny bit about MotiveWave, my experience with MotiveWave, Python as well, and how that compares with this year's trading performance. And that's concerning trading bots as well as MotiveWave itself and the difference that you can get. All right, so let's talk about MotiveWave first. So here we are, MotiveWave in the support forum right here. And one thing I want to highlight here is what is MotiveWave used for. So we have here the asset classes. You can see here futures is number 1, cryptocurrency is number 2, Forex, and then stocks trail not quite a bit, but it just gives you an idea of where MotiveWave is used and how cryptocurrency has become pretty popular within MotiveWave itself. Now, a couple of things I can show you here is the list of websites that I can give you. These are for review on MotiveWave. The one I would really, a lot of these are futures traders, but a lot of these go into detail on why they like MotiveWave. But here, this is a big one for the folks over at MotiveWave. Is Warrior Trading. They've reviewed it, so it's caught the attention of these folks. And this is Ross Cameron, for those that may not know. So in this review, I'll just save you the time with MotiveWave here. On the review, here's the rating right here. So right now, value, well, this number right here, 4.4, is pretty good. NinjaTrade is 4.3. So that's all I'm going to say about NinjaTrader. I've tried NinjaTrader, not had a lot of good success, just bug ridden. I mean, I'm not sitting here saying that MotiveWave does not have bugs, because it does. But we'll leave it at that for now. I'll come back to the bugs with MotiveWave. But with a value for investors, for sure, for all the things that you can do for API developers or algo traders. I don't know of any other platform that gives you source code to over 2, maybe even 300 studies indicators. And that's out there in the open for free. So a lot of people may not know that. The quality of the documents are quite good with MotiveWave as well. Day traders, I don't really go over a lot with the components of MotiveWave. There's automated harmonic scans, automated Elliott wave. I'm saying automated support and resistance. Not a lot sure if a lot of other platforms have that, but it's pretty powerful with that automated. That will save you a lot of time and effort. And support and resistance is another one. So a lot of tools that day traders use cost because of all this automation. You got to factor in time that you'll save and probably benefits that you'll get quickly, which I'll show you moving into MotiveWave and the difference. So as I said, with the innovation, there's a lot of automated this and that. User experience is pretty high as well, and I kind of agree with a lot of this. So you can go over this at your own leisure. Now, one area, let's be honest, as I said, no platform is going to be complete without bugs. We're not talking about like Microsoft level amount of resources that Microsoft would have. If you read this article here at futures.io, one thing you'll know is that MotiveWave has a small staff. And some of the complaints that people have, I think some of it's legit. But mind you, some of those arguments may be a little old, maybe already fixed. But there's some legitimacy, so read that article or resource to get a better idea. Just being upfront, of course. So then, let's talk about some of the things that you can get. One of the things to do this, like the Hurst cycles, is rare, and not only that, but if it did work for certain assets, which I'm sure it does, you can project your next swing or cycle moving into this. So in my case, this, if it worked, you can save a lot of time and benefit from it. So those costs I was talking about will come back to you in terms of profit. So keep that in mind. Another thing is, let's go over the Python trading bot versus a trading platform. Okay, so really important to understand is absolute number one. People ask about, what do I think of this? What do I think of that? If you're not able to get a verified track record, in my case, I am on cointracking.info. If this is not shown, if this is not done in an honest way, I think wherever your source will be, Trading Guru, Trading Service, is going to be absolute rubbish, and you just don't even think about it. Just move on. Here, I can tell you the good and bad of why this went up, why this went up. This is cryptocurrency on my account, Kraken and Binance combined, and why we went through this period as well. Okay, so again, if your trading resource doesn't have this or service for live trading and showing that whatever they're putting out there works, because the name of the game is, number one, keep your profit. Number two is to make profit and return. If they're not showing that up front and just trying to be really dodgy about it, yeah, time to move on. And the other thing is they got to be honest with pullbacks like this one. Okay, let's talk about that. So, as you know, let me go back to this. Couple things to take away from this is truth. Okay, so being in crypto, and I've always said crypto is the number one place to go for return. You can see here we started a couple $100, peaked, and that was back in March. Was it March 2019? Yeah, March 2019 there. Peaked, and that was a couple $100 all the way up to 8,000. Okay, so this is a typical realistic portfolio. I've done surveys. What's a typical portfolio size for most people? I would say a couple thousand all the way up to 25,000. That would be 90% of most people. Now, if you broke it down to that 90%, how many have less than $10,000? I would say 75%. So you're going to be probably reaching 2/3 of the crowd that does not have more than $10,000 in a trading account, active trading account. And this is fairly realistic. So you can see here we peaked here at 7,000. So now let's get into the topic of Python API development, bots, whatever you want to call it. So here we peaked out, the whole crypto market crashed here. And then we went through this period between May and October this year, basically taking profit, giving back profit. And this is all 100% Python, 100% Python development, bot development. So what that means is including the execution orders of Python. And that was probably one of the biggest weaknesses and frustrations that, from a high level, technical or not, you may not see. But you will struggle with that because you're not seeing a lot of things that you can get feature-wise, functionality-wise with platforms, namely like a MotiveWave. So as a result, you're like, kind of like, call it pissing in the wind, as I call it, and really not getting nowhere with this. And actually, you can see the trend, it declined. Okay, so come October here, October 10th, 12th, or whatever, that is when I broke up my functionality between my analysis with Python and moved the execution over into MotiveWave. And you can see here now, MotiveWave, my portfolio has exploded because of that. And this is why it's critical to get a trading guru, educator, even a trading source that you rely on explains this properly to you, the good and the bad of this type of thing, using a platform like MotiveWave, and then also using bot development or just any programming language where you're trying to build out a self-contained trading system, trading bot with no other dependencies. So once that's shifted over to here, what happened was we started building back the portfolio pretty close to reaching peak. Now, I'm not saying if I did this and continue, I think we'd still be hit by the crypto collapse back in May. And I think we're going to hit another big one at some point, starting to see the signs of it. Anyhow, back to MotiveWave versus a Python trading bot. So along here, we went through that where the execution was done within Python. Couldn't probably explain why that was happening. We're not able to build out an account. When you think you are, boom, look at this big collapse here. So once I made this a shift, and the reason I saw it was because trading comes down to two big things. It's timing and momentum, depending upon if you're on the long or short side. So if you get the timing right on those particular instruments, and again, you only want to work with instruments, namely, let's say crypto coins, that are top performers at that time. And as you know, crypto is probably the hardest asset class to trade. So when you're in an environment, in a spot market like in crypto on an exchange, you don't have a lot of options where you can both short and long. But if you're in a market or an asset class like crypto that has extreme volatility, and you're able to make money like this, people tell you, you say, if you can do that in that kind of environment, you're probably considered one of the best traders in the world, because you don't have other factors that work in your favor. Okay, so if you're in a down market in crypto and you're still able to make money, and you're in a long only market and still be able to make money, as I said, you're probably considered one of the best traders in the world. And not saying that I am, but trending wise, it's the way it's looking, and here it is, third party verified to show that. All right, so unless, like I said, if you get a trading guru that shows this, move on. Okay, so let's go back over the Python. So once I broke out the trading orders, trading execution out of Python into MotiveWave, I was able to see the charts using the functionality of MotiveWave and a lot of things, like for instance this one as just one of many that I can use to take advantage of that. And because of that and the back testing capabilities of MotiveWave is you can do it so quickly and not waste your time, like 90% of your time in the back testing process when you're here in the development of a strategy, okay? Because you're gonna be like swimming against the tide, trying to build out a working strategy in an environment or in an environment of falling knives, right? You're just kind of gonna get pushed back, and this is what's gonna happen. And because the market, especially in crypto, changes so fast, and I hate to say it, is random. Cycles don't work. I'm just putting up a video on that 60-day cycle. It just doesn't work. It's not dependable. It's not predictable. So it's all random. So when you're in that kind of environment, this type of development, trying to get execution and automated trades to work within Python doesn't work, because you need more functionality and features to see that and be able to see certain coins, in my case, work when the momentum's there, when they are the top performers at that time. It could be for a day, it could be a couple hours, could be at most a couple days. So knowing that, you're able to see that in MotiveWave, and that's the difference. And as a result, you build out your account. So let me show you some of the things that we get to deal with here. So this was part of what generated this video topic. So here it says a set of indicators, tools, and how they're used is user dependent. That is a bunch of BS. And why do I say that? Set of indicators. Okay, so let's say you have 200 plus, 300 plus indicators to choose from just alone in MotiveWave. Okay, and then you have to contend with that. Then you have to use a strategy. So you could use a combination of those when they work. And then we're not even factoring the timing of which coins move or which instruments are moving, and then we're talking the top ones, even in a very down market. And then we also have to deal with, is there predictability behind it? Is there a cycle behind it? And usually there isn't, especially in this environment where everything's pretty well broken, and I listen to Bloomberg, and they're all whining about how the predictability and price discovery is broken because of the Fed. So that's what the institutional guys are saying. So this may used to work, and now, especially when everything's all heavily computerized and is systematic, these notions may work for, even in Forex doesn't work, okay? Because I've shown, going back 20 years, where there was a peak, where a lot of currencies were moving, and then, again, fundamental, from a macroeconomic level, there's a big long-term collapse over 5-10 years, and then a lot of those currencies just go range-bound, and there's no performance in them. Not much to do with the bot itself. Yes, and let's just say that this sentence is true. Okay, let's say that sentence is true, alone on that. No bot, no strat, no automation whatsoever. This may work, but not in today's age, especially when you got the Fed pumping money into the market and just building out liquidity into the market, and any brain dead person can figure out that yes, you can get really good performance with U.S. stocks over the last 10 years, and that's what they've done. More gold, and that's an easy trade. Okay, but those days are going to eventually come to an end as the game of the Fed printing money will come to an end, and it will, because if not, then our inflation, which is happening now, will just go up. So this gets thrown out, and again, that price discovery and trying to suss out signals from that gets thrown out. Every day is a new day with new market conditions, depending upon what your trading goal is, requires skill in how you use these tools. Yes, but in today's age, the general trend is lots of liquidity in the market, so stock markets go up, everything else kind of dies out, right? But you want to be in asset classes that grow. Forex currencies is dying. Stocks, I think at some point will come to an end, and it will be moved into something like bonds, but like, give me a break. Bonds are pretty well dead as well, unless you're really excited to get 0.0005% return. So that, or let alone a negative interest market as well. So bonds may not be good. That's why a lot of people are moving into crypto, because that's their last form of real true hedge, outside of so-called gold and silver and other precious metals, because they're so manipulated that the price has been suppressed so badly that there's really no return in that as well. So if your goal is 100% return, is different than your average daily compounding is 5%. I would tend to agree with that. If you're just in the market with stock trading, 5%, 1%, yes. 100%, very tough to do. And stock market, because of that trend is there, yes, I would agree with that. But as that will come to an end as well, if a trader doesn't know there's no way that I know of how to show ways of getting there. Yeah, because the market is so distorted now in the last, just look at the last year or 2 years, how it's getting more and more extreme, where things are not as predictable as they used to be. I don't know. I think a lot of people don't know what they're doing, because they don't know what their goal is. That's the problem. So usually you have to talk to people and figure out what they want. And if they don't know what they want, then you have to figure out, well, here's a specific set of questions, and answer them. And if they're not able to answer them, then, or not willing to, then the question becomes, well, why would I want to help you? Because you're just going to be a cat chasing its tail. And realistically, this is realistic. This is where you'll end up with your results of your trading. You just go up and down, give back profit, not really building anything. No matter what the state of the economy is, no matter what the state of the general market will be. But coming back to this. So the last thing is, we are being pushed into a new era. Nobody can predict where we're going to go, but that's why there's more movement now. As I said, more institutions are moving into crypto, and more institutions are moving into crypto for the reasons I stated. Not only that, when you look at, again, just as one example here, what I showed, how MotiveWave, cryptocurrency is the #2 asset. It's blowing the doors off of Forex and stock. Other people see that as well, and it could be institutional as well. Very small subset, I know, but I do believe that this is a trend that has been taking shape for the last probably 2 years. So there's that happening. Now, last statement, he says, I have over 50 years of teaching experience. Listen, if you look at movie stars, how do they get picked in movies? It's very simple. Movie stars are not picked upon because they've won an Academy Award 2, 3, or 10 years ago. They don't. These producers and directors don't give a rat's ass about that, the past performance. What they care about is where you are today, and are you the hot commodity for them to be picked into a movie. And then if they are, that because of that, that's cachet to the movie as part of the cast, and then that enables the movie have a higher predictability to be a box office hit. So past performance of this 50 years experience is, kind of hate to say, irrelevant. You have to adjust and be able to adjust to where the market is today and where hot money is going, hot capital is moving to. And as I said, it's all going into crypto. So the whole notion of what we know as traditional trading, be it in futures, be it in Forex, be it in stock, it's going to either end or it's going to get into a very challenging trading environment. That's where we're at with crypto and inflation kicking in, taxes probably going up, and national debt's too high. And the only real performance, said right now, is the stock market. But I do think that will come to an end soon as well. That's pretty well it. So, as I said, and always say, if you like this sort of stuff, what I would do, just get on our email list at quantlabs.net, get our trading like a boss set of PDFs, as well as we don't sell or release any of your information, and we'll leave it at that. Thanks for watching.